This is James Fox with another video tutorial for QuickBooks Pro 2013. In this tutorial, we're going to create a sales tax report in preparation for you to pay sales tax for your company. Now, before you create the report, it's very important for you to determine the frequency of when sales tax should be remitted to the corresponding tax agency. So if sales taxes are due every month, then you're going to create a report every month. If sales taxes are due annually, then you only need to create a report once per year, but I do advise you to create one periodically just so you can keep up with the amount of taxes that are due to the tax agency. Now in this example, for my fictional company, Joe's Landscaping, the tax agency requires that we remit taxes every month. So we are going to create a sales tax report for the taxes that were collected from January 1st through January 31st. Now here is a sample invoice that I have already created, and it's going to be the only invoice in the report for this tutorial. I've got two items on this invoice. The first one is red roses, and red roses are taxable. It's a tangible item and they are taxable. The second one is a service item. And in some states, service items are non-taxable. So I've got the hedge trimming service item coded as non-taxable. So I've got a taxable item and a non-taxable item on this invoice. Now if you look down here in the tax field, you'll see that I have selected the sales tax group of state and local tax. That's because this customer is required to pay state and local tax. And in order for me to charge both state and local sales tax, I had to create a sales tax group. And I did that in lesson 5-5. So if you don't know how to create a sales tax group, go to lesson 5-5. Now the total sales tax rate of the sales tax group is 10%. So 10% is going to be charged on the taxable items only. Now once again, my taxable item are the red roses. The red roses are $50. 10% of $50 is $5. Sometimes QuickBooks has rounding errors when it comes to charging sales tax, which is why you see $5.01 instead of $5 even. Now Joe's Landscaping made this sale on January 31st. And as I said previously, the tax agency in this area requires that we pay sales tax on a monthly basis. So we're going to create the report from January 1st through January 31st. And this invoice is going to be included in that period because this sale was made in January. So now let's create the sales tax report. From the QuickBooks homepage, click Manage Sales Tax towards the upper right corner of the QuickBooks homepage. In the Pay Sales Tax area, click Sales Tax Liability. The reason why it's called a liability is because when you collect sales tax, it's not your money. You're collecting it on the state and local tax agencies' behalf. So click Sales Tax Liability. Now the first thing you need to do is select the correct dates for which you have collected sales taxes. Now you can do that in a couple of ways. And the first option is to select the collection period from the drop-down box here. If I select this calendar year, it will display all of the taxes that I have collected for the entire year. Another option is to select the dates manually, which is what I'm going to do here, because this report needs to be from January 1 to January 31. So I'm going to select January 31st. And to update the report, you may need to click Refresh. Now once your report is created, you're going to see several rows and columns. Now the row headers are going to be the tax agency to which you must remit the taxes. And the column headers are going to be categorized by taxable and non-taxable sales, the tax rate, the amount of taxes collected, and the sales tax payable as of a certain date. Now it's very important that you are aware of the details of the tax reports, and you can view any invoice that's included in the report by using the drill down feature. If you hover your mouse over any of the numbers in the columns, you'll be able to drill down on the amounts to view the corresponding invoice. For example, in the total sales column, you see a total amount of sales of $800. Now before I drill down on it, and you drill down simply by double-clicking the amount, it's going to give me a breakdown of this total, and it's going to be categorized by taxable and non-taxable sales. So let's drill down on this amount, and now you see the invoices that are associated with this total. Here are the taxable sales, which are the red roses, and the non-taxable sales, which is the service rendered for hedge trimming. Now let's close out this window and go back to the report. Now the next column is going to be non-taxable sales. When you drill down on this column, you're going to see all of the invoices that have a non-taxable item on it. So let's drill down on this amount, and the invoice that I showed you previously is listed because there was a non-taxable item on it. Remember, this is only going to show the invoices that have a non-taxable item on it. The same thing goes for the column with taxable sales. I'm going to drill down on that, and you will see all of the invoices that have taxable sales items on them. Now let's move on to the taxes collected column. Now if you drill down on the tax collected column, QuickBooks is going to list each invoice individually, and you will see the amount of taxes that were collected for each invoice. So let's drill down on the tax collected column, and here you see the invoice, and if you look over in the amount column, that's the amount of taxes that were collected for this particular invoice. If there were another invoice listed here, then you would see another row with that invoice's information listed and the taxes that were collected for that particular invoice. So let's take one last look at our sales tax report. Now let's take a look at how much do we have to remit to each tax agency. As I said previously, the row headers indicate the name of the tax agency to which we must remit the taxes. So the tax rate for the Los Angeles County Department of Revenue is 4.75%. Taxable sales is $50. So we must remit $2.38 to the Los Angeles County Department of Revenue. For the State of California Department of Revenue, taxable sales is $50 for the red roses. The tax rate is 5.25%, so we must remit $2.63 to the State of California Department of Revenue. Now remember, I made up these tax agencies. I do not know what their exact tax rate is, and that is how you create a sales tax report in preparation to pay sales tax. If you have any questions, please send me an email. Once again, my name is James Fox, and I'll see you next time.